Nouriel, what's your take on the U.S.? Is it actually heading into stagflation?
Well, inflation is still well above target. Core CPI was at 5.6, is falling, but not fast enough. The Fed has revised upward the prediction on what core PC is going to be by the end of the year from 3.2 to 3.5. They want to, in principle, hike in May and then stop. But if inflation were to become more persistent, that option is not going to be available. And then the Fed is going to be in a very serious dilemma, or in actually a trilemma. They want to achieve price stability, growth stability, and avoid a hard landing, and financial stability. If inflation is going to have core PCE a handle of 4% rather than 3% by the end of the year, then you'll be in trouble because you'll have to raise rates well above 5.25. If you don't do that, inflation expectation get de-anchored. But if instead you raise rates above that and markets are actually pressing in a cut in rates, so there'll be a surprise, then you could have one, a hard landing of the economy, and more financial instability for the banks and for overall long rates as well. So achieving price stability, growth stability, and financial stability with one policy tool, that is the Fed funds rates, to me looks like mission impossible. So either a hard landing and a financial crash, or the anchoring of inflation expectations.
So what you're telling me is that this is not going to end well, and it goes back to the idea of a doom loop, right, that you've been talking about for the last month. Are we getting closer to that, given the latest set of data and policy done by the Fed?
Yes, in the sense that right now there is a credit crunch. The regional banks will have to contract credit, and the regulators are going to tighten also the supervision regulation of banks, especially the regional banks. These regional banks are a significant source of credit to households, to SMEs, and to commercial real estate. People have already estimated that the impact of the current credit crunch on U.S. economic growth is going to be at least 50 basis points. The U.S. economy has slowed down already in the first quarter to 1%. If you go from even 1% to something like 50 basis points less, you are close to zero. It's a growth recession. And if that happens, the amount of distress in financial market will become more severe. We'll start to see rising defaults for households on their auto loans, on their credit cards, on some of the mortgages. You're going to see rising default rates among highly leveraged parts of the business sector. And that credit crunch becomes more severe, makes more likely a hard landing of the real economy. And if you have a hard landing of the real economy, NPLs and defaults are going to rise. So you end up in a doom loop between economic instability and financial instability.